Here are today's top 6 crypto stories. The biggest short sellers in the market just watched their bet go wrong, in public, on-chain. 1. On Tuesday, Bitcoin punched through $81,000, its highest price in more than 3 months. And the $1.4 billion in institutional short positions betting against exactly this move are now underwater. 3 firms built that bet on Hyperliquid over the past week. Abraxas Capital with a $783 million book, Wintermute, which grew its short to over $190 million by the weekend, and Farside running 15 times leverage against Ether. As of Tuesday night, none of them had closed. Abraxas alone is sitting on roughly $58 million in unrealized losses. Here's how we got here. 10 days ago, Bitcoin traded near 62,000. The move since is roughly 25%, the second largest weekly gain in 5 years. Monday night, it printed 80,600. Tuesday, it went through 81,000. The 50-week moving average stopped it, and it settled near 80,000 into the night. So, why have the shorts not been forced out? Because these are mostly hedge books. Their liquidation levels sit 62 to 66% higher, some above $128,000. They cannot be squeezed out, they can only bleed, which makes this a war of attrition. On one side, hedge desks paying losses every day, the price holds. On the other, a wall of institutional buying. The whales wanted the rejection, they got the retest, and the tab is running. 2. The other side of that trade is the ETF machine. Spot Bitcoin ETFs took in another $337 million on Monday, the 7th straight day of net inflows, more than $2.5 billion over the streak. Total assets in the funds reached $98.5 billion, up from $78.7 billion 1 week earlier. That is $20 billion of growth in 7 days. This is spot demand outlasting a squeeze. Institutions are chasing the move, not just covering it. 3. Here is what makes this rally different. Bitcoin futures open interest fell to a 5-month low, under 590,000 Bitcoin, even as the price surged. That means liquidations, not new leverage. Crypto margin positions hit an all-time low, around 11% of the market, and funding rates stayed under 10% annualized. Price up while leverage goes down is the healthiest structure a rally can have. This move was bought with cash, not borrowed. 4. The institutional bid is spreading past Bitcoin. On Monday, Ether funds added $115 million. Solana funds took in $33 million. XRP funds added nearly $14 million. For the first time this cycle, the ETF wrapper trade is running across 4 assets at once. The open question is whether the smaller books keep their bid on the day Bitcoin streak ends. 5. Sentiment just flipped. The Crypto Fear and Greed Index went from fear to greed overnight and printed 77. 10 days ago, this market was in fear at $62,000. Nothing about the fundamentals changed that fast. The crowd chased the price. It always does. A flip this sharp tells you about the crowd, not about the floor. 6. Watch one line. The 50-week moving average is what stopped Tuesday's move at 81,000. And it has capped every attempt this rally has made. Break above it, and the squeeze math starts pointing at the whale's pain trade. Fail here, and the $1.4 billion short book gets its rejection after all. Sentiment is stretched, the level is proven, and both sides know exactly where the fight is. This level decides the week. Greed at 77, leverage at record lows, and a $1.4 billion short book bleeding against a $2.5 billion ETF streak. That is crypto today. Here is today's question for you. When the biggest shorts in the market are hedge desks that cannot be liquidated, who blinks first? The desks paying losses every single day, or the ETF buyers paying a premium at 3-month highs? Tell me in the comments. I read them, and the best answer usually comes from one of you. Blue pill. The ETF bid is real spot demand. The shorts are just hedges doing their job, and the path of least resistance is up. Red pill. The 50-week average has rejected this rally at every attempt. Sentiment went from fear to greed in 1 week, and the most sophisticated desks in the market are paid to fade exactly this moment. $58 million in losses has not made them close. Ask yourself what they know. The timeline keeps moving. We will see you in the next one.